Welcome back. Time to discuss some SoFi. Stock is a little bit lower here. Jenny, but it seems like a lot of these names, these kind of hyper growth kind of stocks, these more next gen like stocks today are just the stocks that are lower. I'm looking over, it's like the FANG names, the ones that are underperforming.
Right, and I mean, this name has been just, on a performance basis, it's been up 90% now year to date. It has climbed back about 13.5% from its 52-week high, but SoFi Technologies has been a name to watch this year. A lot of hype around the resumption of student loan payments. So here to tell us more now on that, I'd like to welcome in Renita Young, senior markets correspondent for the network. So Renita, I was reading this note today. It's not so optimistic, so walk us through it.
It's not. JPMorgan is pouring cold water on the very thing that made this hot stock boost 90% year to date, right? This analyst is saying that the resumption of student loan debt payments is not going to be as big as SoFi's management is expecting it to be. Now, they value the multi-year addressable refinance opportunity at around $200 billion. But the analysts at JPMorgan expect half of that, closer to about $90 billion. And they feel this way because they believe refinancing with a private student lender like SoFi makes economic sense for but a few borrowers, just a fraction of borrowers. And that is those with relatively high income, better credit scores, and annual percentage rates, by the way. And he said that most borrowers are simply better off holding on to their existing federal loan or applying for an income-based repayment instead. So they said that they found very few people actually refinance their student loan debt with private lenders. Less than 2% of student loans outstanding were refinanced in 2019 for SoFi, despite the historically low interest rates at the time. So this analyst says while there may be an initial surge in refinancing, they don't see the tsunami in the stock that it seems to be reflecting.
You know, Renita, there's been a lot of hype around this student loan kind of repayments kicking back into gear. We've heard about kind of the fallouts that could mean for shoppers at places like Target, when it's like kind of the chess game of trying to figure out what the next move will be once that happens. But I saw JPMorgan also weighed in on the fact that, well, one, they don't only do student loans, but they had some thoughts on just student loans in general being on their books. What were those thoughts?
He said that they don't believe that having student loans on their books is the best use of capital. And that's because student loans, they bring in less of the interest rate capital and they have lower returns significantly than personal loans. Now, he did acknowledge, however, that the student loan products bring in new customers in a pretty cost-effective way, so that could be like a gateway product to bring them in for other sales opportunities. But he said that SoFi needs to balance student loan originations and loan sales, and that it's in the company's interest to originate and sell its student loans as quickly as possible. But by the way, JPMorgan still has a neutral rating on SoFi, but Smith's December price target of $6 is pretty much lower than where the stock is trading today.
Yeah, lower by about $2.50, excuse me. So this would be some pretty substantial downside given the fact that this is only like an $8.60 stock. So some negativity. I think it's always important to be balanced here. I think that those that are extremely excited about this name, be grounded here. This name has taken off on a year-to-date basis. We are seeing shares retreat here about 2.5% now on the session, but great breakdown on what has been one of the hottest names to discuss as of late, SoFi Technologies. Renita Young, senior markets correspondent for the network.